Welcome to our quick guide on letters of credit or LCs, a crucial tool in international trade. The main purpose of an LC is to ensure that sellers get paid once goods are shipped, while buyers receive their goods as agreed. LCs serve three main functions: facilitating payment between buyer and seller, guaranteeing payment upon compliance with terms, and providing financing options such as deferred payment for buyers or faster payment for sellers. This guide focuses on commercial LCs, which are used for the sale of goods between two parties. Throughout this video, we'll break down the key concepts, types, and workflow of LCs, making the process clear and approachable for anyone new to the topic. Letters of credit come in various forms, each serving a unique purpose. For example, a red clause LC allows the seller to receive advance payment to buy or produce goods, while a green clause LC adds security by requiring receipts for goods. Other types include the commercial LC, which covers standard transactions, the standby LC, which acts as a guarantee in case of default, and the transferable LC, which supports transactions involving intermediaries. There's also the back-to-back LC, involving two linked credits for complex deals. Importantly, an LC is independent from the underlying sales contract. Banks deal strictly with documents, not the goods or services themselves, ensuring a neutral and secure process for all parties involved. Several parties play essential roles in the LC process. The applicant is usually the buyer who requests the LC, while the beneficiary is the seller who receives payment. The issuing bank, typically the buyer's bank, creates the LC, and the advising bank, often the seller's bank, authenticates and forwards it. Other important roles include the nominated bank, which handles the LC, the confirming bank, which adds its guarantee, and the negotiating bank, which may purchase document. The reimbursing bank is responsible for transferring funds. Each bank's role defines its responsibilities, ensuring a smooth and secure transaction. Understanding these roles helps clarify how LCs protect both buyers and sellers in international trade. Workflow of a letter of credit begins with the buyer and seller finalizing their agreement, including all requirements and documents needed. The buyer then applies for an LC through their bank, which issues and sends it to the advising bank. The advising bank checks the authenticity and informs the seller. Once the seller receives the LC, they ship the goods and gather the necessary documents. These documents are presented to the bank for examination. If the documents comply with the LC terms and international standards, payment is made according to the LC's terms, either immediately or after a set period. If discrepancies arise, they can be corrected or negotiated. This structured process ensures trust and security for both parties. Letters of credit operate under strict international rules, primarily the UCP 600, which standardizes practices worldwide. Amendments to an LC can only be made with the agreement of all involved parties, ensuring stability and predictability. Once the seller presents the required documents, the bank examines them for compliance. If everything is in order, payment is made as specified, either at site or after a deferred period. If there are discrepancies, options include correcting documents, requesting amendments, or seeking approval from the issuing bank. This rigorous process, governed by clear rules and defined roles, makes LCs a reliable method for managing risk and ensuring payment in global trade.